Good evening to you at this hour on the business desk. Airports Company South Africa has attributed its robust financial results to a rebound in air traffic, higher tariffs and improved trading conditions. The operator of South Africa's 9 key airports has posted a 1.1 billion rand net profit, along with a 13% rise in total revenue to 7.9 billion rand for the year ending in March. ACSA says this was supported by a 13.2% hike in aeronautical income to 4.1 billion rand due to an uptick on aircraft movements. ACSA CEO Mpofu speaks to us now about the company's financial performance. Thank you so much for your time. Let's first unpack the strategic turnaround and infrastructure upgrades that have been undertaken to arrive at these outcomes.
Good evening, and good evening to your viewers. My apologies for my voice. Thank you very much for this opportunity. We're really quite excited about what we've been able to achieve as Airports Company South Africa, clearly indicating resilience over what has been a period marked by some operational challenges, but steady growth and particularly global challenges in the environment. What has been important about our results is clearly what's indicated as aeronautical revenue growth. Even though we've missed our KPI target, we came out significantly at 4.1 billion, but also equally exciting is the non-aeronautical revenue, where we're able to achieve 3.6 billion. Those two indicators quite clearly show confidence and growth in the sector, despite the minor challenges that might impact on us. But it's also based on prudent financial management. Our operating expenditure basically increased to 4.9 billion out of 4.2 billion the previous year. But that was to be expected because, in a sense, to implement the very robust infrastructure program, but also to increase our capacity of managing the airports in a much better way with maintenance programs that were starting to be implemented. We did have a slight increase in operating costs and particularly employee costs. But that's not worrisome because, in a sense, what it indicates is the necessary growth for us to fully recover from COVID. So the passenger numbers that led to this are actually quite exciting, and quite clearly we're at 18.97 million passengers in this year. We're still short of our 2019 performance where we were over 20 million, but the 92% has carried us well, and it actually is also the equivalent of 230,000 air traffic movements. The air traffic movements are actually the number of aircrafts that land in our network, and that number having increased significantly is a clear sign of the confidence that the airline industry is putting, and more importantly, of increased frequencies that are actually traveling into South Africa and the international airlines, but also the growth in the domestic market. What it also indicates is that our load factor still has some room to increase. It's currently sitting at about 80%, and that basically means aircraft can still get fuller. And the capacity and the fleet capacity has actually been put out by airlines. That level of confidence is really what has contributed towards these results. And we're quite happy to share the 1.1 billion. We've actually been able to pay dividends to our shareholders, which shows our ability to really create shareholder value. And included in that is a dividend, ordinary share dividend that has increased from 47 million to 113 million that we paid out to our shareholders. And that basically is quite a significant growth. On the other hand, we have an obligation to pay out a preference share dividend that we paid 198 million in this year, compared to a significant amount that was paid last year at 768 million. The reason for a higher payment on dividend last year is simply because it was front-loaded. We had not been able to pay dividends in the COVID years, and that was the first payment on the preference share dividend. But in fact, the figure to watch out for is that significant growth in ordinary share dividend from 47 to 113 million. So we're very pleased. All our indicators are up in terms of our total KPIs. We achieved 10 out of 11, and that's a 90%, 90.9% achievement across the board. Myself and the teams at ACSA exhilarated by what we've been able to achieve, but it signifies steady growth forward into the next year with even a better commitment and better results that we can promise South Africans.
Good news all around, but you did touch on some challenges that may still remain. What's your biggest worry, particularly given the operational issues that were witnessed just last year, the likes of fuel and the insourcing of security?
Our main challenges remained the uncertainty around fuel security. We have put at ACSA the best possible solution to the jet fuel supply system at ACSA. And that has included the installation of a bypass, an 18-inch line, a 20-inch line, and increasing our fuel capacity. Now, that problem has been solved at ACSA level. We even propose to build new fuel tanks in order to store enough on the platform to be able to provide. What we can't control, what is not in our control, which keeps us awake at night, is the continued uncertainty about the increased importation of jet fuel in South Africa because the capacity to actually refine it locally has diminished. That is something that we can't control, and we have mitigated as much as we can in terms of increasing our own storage capability, but that still remains somewhat of a risk, which we manage with our partners in the fuel industry from time to time. The second would be the issues related to the security staff and the insourcing, and that basically would require us to plan better in the future to ensure that the transition between an insourcing program and private security ownership of particular parts of the business and elements of the operations is something that we do much more carefully, steadily, even have an overlay transition that will enable us to manage the shift between in-source security and outsourced security. The other issue that is really worrisome is our own capacity to implement the CAPEX program. We've been speaking at length about a 21.7 billion CAPEX program, but it's not going to be without challenges. In South Africa, we know we are very often challenged by the construction sector, challenges such as construction mafia, and other issues when you implement big CAPEX programs. We're putting mitigation measures in place with respect to this to ensure that we minimize service disruptions, but also interference in the execution of our CAPEX program. And that basically will also be accompanied by a risk that is pervasive in the aviation industry, and that's the risk of losing skills to other countries and very critical skills in the aviation sector. That we would mitigate very clearly by ensuring that we're training people, we're replacing those that we're losing to other countries. Middle East particularly is paying handsome dollars that we can very seldom compete with. But in essence, what it requires from us is to grow our own wood, increase the capability that we're creating in our own country. Our training academy is seized with this opportunity of training more South Africans who can fill the gaps if there are people that actually migrate. So in a sense, we're really comfortable. There are obvious other risks that we worry about, but we've got an extremely robust cybersecurity mitigation. In fact, we've been lucky, touch wood, and not suffered a cyber attack compared to organizations like ourselves. But in essence, what has happened is because we've put up quite a robust, sophisticated mitigation on cybersecurity. It's not that we've not seen the attacks. In fact, they've increased in number, but in essence, we have built up our resilience to cyber threats and we manage them quite extensively. The external global threats and global tensions, given the wars in Russia, Ukraine, Israel, Gaza, do have an impact on our aeronautical revenue, as you've seen. Whilst we've achieved that 2.1 billion, he actually missed it by 61 million. It's not a position we would have wanted to be in. It's the only KPI we've missed, and that lies in the overall global environment of traffic movements and international traffic coming into South Africa. But we continue to work hard, target areas such as our source markets, increase with our trading partners, both business travel and leisure travel, to ensure that we're able to protect the business from the ravages of externalities.
I'm glad that you raise the global economic issues that are currently playing themselves out. And as a parting shot, I'd also like to find out what then needs to change in ACSA's strategy, particularly when we look at a domestic level with regards to creating even more jobs, but at the same time dispensing the resilience and sustainability of creating profit and running a well-oiled machine.
Well, our strategy is very clear on this. We've adopted a strategy of innovate, grow, and sustain, and primarily to be able to respond to those challenges that we talk about. Our innovation strategy is one that's going to lead us to digital transformation, efficiencies in airport operation, but more importantly, in the high-level deployment of new technology that leads us to our vision of being the best-run smart airport network on the African continent. And that basically puts us in a position to improve our offering to passengers, but also grow the airport network. We've spoken about our CAPEX program that will actually ensure we're able to grow the network quite significantly. Whilst we focus on refurbishment, rehabilitation, and the improvement of our current infrastructure, there are pockets where we're required to actually increase the footprint. We do so through the expansion of terminal buildings, the expansion of passing gates, and the expansion of our infrastructure that's available to our passengers domestically. But we also do it through growing our footprint and looking for more business opportunities outside of South Africa, able to provide services to other airports. We still retain our Brazilian equity ownership, and that basically holds us in good stead for providing consultancy services to other airports, particularly on the African continent, as we continue to provide that part of the business and diversify our revenue streams as a mitigation towards reliance, particularly only on international travel, where some risks will be beyond our control. But in the domestic market, we also would see ourselves playing a significant role in providing services to domestic airports that are not under the ownership of Airports Company South Africa. And we do so through contracts, partnerships, MOUs with various airports outside of ours. Mhlathuze, which is the Richards Bay Airport. In Tshwane, we provide support to the Vanderpoel Airport. We've got an MOU with Polokwane. And all of those things help us to diversify our revenue streams by providing critical airport management and airport services to other airports that are not legislated or owned by ACSA itself.
Thank you, as always, for your time. That's ACSA CEO Mpofu talking to us about their latest results. A good showing there in terms of operational performance.